Welcome to the Fast Five by Fear and Greed. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, today in just 5 minutes, we're going to find out some of the stocks that professional investors are watching that the rest of us might not necessarily have heard of.
Yes. Now, remember, this is general information only and doesn't take into account your personal circumstances. Of course, you should get professional advice before making any investment decisions. Our favourite analyst is Matthew Kidman, Principal of Centennial Asset Management. Welcome back, Matthew.
G'day, Sean.
You keep an eye on a lot of different companies. Can you just take us through some that you like? And once again, I'm going to repeat to our listeners, everyone has their own personal circumstances and needs, so go and get professional advice before doing so. Keeping that in mind, Matthew, stock number one, what do you like?
Well, just remember this, that we're looking for the course of 2023, what we like over the next year. Not always the companies that I always like, but stock number one is a company called Steadfast. So insurance broker, and insurance premiums globally, but in Australia, are very firm at the moment. And what you want, because we're going to have an economic slowdown, you want companies that are going to be able to maintain their growth in terms of profit growth over the year, because investors will huddle around that. Now, we've got three insurance brokers. We also like a little one called PSC Insurance, or smaller. It's not that little. They are expensive, but I get the feeling that there'll be earnings security this year, safety in companies hitting earnings, and that's where investors will go. So Steadfast and PSC Insurance.
Okay. What about another one? So that's Steadfast, that's in the insurance sector, and you have told us previously that you're a bit of a fan of the insurance sector for 2023. What's another one?
Well, the other thing I like is, once again, earnings stability is, as we've seen, the yield on long bonds have started to come off as the US in particular talks about a slowdown next year. Now, the short end of the rate cycle is going, it's holding in firm, and we've still got the Fed and other reserve banks lifting, but the longer end of the curve is starting to come down. So you want long-dated assets that get valued off that. One that we like is Transurban, which is the tollway for roads. It obviously has inflation pricing ability, so inflation goes up, they reprice on that basis. But the valuations over time, and all the analysts will value that on the long-dated bond, which means the lower the yield, the lower the discount rate, and therefore the valuation goes up. So we think, and the earnings are steady because it's roadway, as long as we don't get another COVID, of course.
Yeah, okay. So along those lines, what about healthcare? I mean, does that fit into that same sort of bucket or not?
I think so. Healthcare definitely does. Not as stable, but it's seen as a very resilient and defensive business that has long-term earnings cycle as well. So what are you looking at there? You're looking at things like CSL, which is one of Australia's biggest companies. So I wouldn't be scared to own CSL through the next year either.
Okay. Another specific, I'm putting you on the spot here, Matthew. I want two more from you. Two more.
Righto. So two more. Another bigger company, and we talked about this when we did the big caps, is QBE Insurance. I think the insurance companies might actually have a good year after a long time, especially QBE has had a decade of failures. So no one likes it. That's a tick. No one's there. Everyone's got to discover it. But they have got premiums rising a lot, and we think that the problem with a lot of the disasters that is inflicted, especially domestically, is going to subside over the next year, especially water damage. We've had a lot of water, and as the seasons change, we think they will get premium increases, not as many claims, profitability will go up, and that's a good outcome. So QBE Insurance.
Okay, so QBE and the final one, fourth and final one. So what have we got so far? We've got Steadfast, we've got Transurban, QBE Insurance, the fourth.
Let's go for the fourth one, being a small one, which is linked to the energy sector. It's called MMA Offshore, the old Mermaid Marine. They supply boats to the gas and oil sector offshore, helping them build and maintain those rigs and so on out, and the drilling out in the deep waters of the ocean. They also, a new part of their business is wind farms. Offshore wind farms have become relevant to them. A few years ago, they had far too many boats. There was discounting for their product. Now that supply of boats around the world has tightened up, there's plenty of demand coming back in, and so they're getting rate increases, and we've seen a profit upgrade recently from them. I think you'll get 2 or 3 more over the course of this year, and people will price that in. So MMA Offshore.
In 12 months we're going to replay this to you.
Yeah, I know. So I'm glad you're asking me about 5. If you ask me about 1, it'd be a disaster.
Yeah, fair enough. Matthew, thank you for talking to Fear and Greed.
Thanks, Sean.
That was Matthew Kidman, Principal of Centennial Asset Management. Michael, you would play it back to Matthew. You really would. You're cruel.
Oh, I certainly would. And I was just there frantically taking notes and not really keeping up. And then I remembered this is a podcast. I can just go back and listen to it as many times as I want.
Exactly right.
All right. Thank you very much, Sean.
Thank you, Michael.
As always, you should get that professional advice before making investment decisions. That's it for today. Make sure you hit follow on the podcast. There's a new episode every day, regular business news from January 16. I'm Michael Thompson, and that was the Fast Five by Fear and Greed.